Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 strong buy retail stocks. So let's get into it. All right, guys, welcome back and thank you all so much for being here. We are gearing up for Thanksgiving tomorrow, which means shortly after will be followed by the busiest shopping day of the year with Black Friday. So this had me thinking that it's probably time to take a look at some retail stocks as we enter into the holiday shopping season. So today we're going to look at 3 companies all rated strong buys by top analysts and have some double-digit upside potential. Just before we get into all of that, this is a friendly reminder that TipRanks is having their biggest sale ever over the holidays. So from Thursday to Saturday this week for Black Friday, they'll be giving 30% off premium and ultimate subscriptions. So make sure to stop by the website if you've been thinking about signing up. Okay, let's get right into our retail stocks. First on our list is Bath & Body Works. Their stock trades under the ticker BBWI, currently priced at $73.88 per share. Bath & Body Works also pays a dividend, currently with a yield of about 0.6%. The company focuses on fragrance, candles, soaps, and lotions. They sell their personal care and beauty products in more than 1,700 North American stores and with nearly 300 stores in countries around the globe. With over 55 million customers and $6.4 billion in 2020 net sales, the company is the #1 specialty home fragrance and fragrant body care in America. They have a notable market share of 22% in the home fragrance category and a 21% share of the soaps and sanitizers category. And they are the #1 brand in fine fragrance mist, body lotion, cream, candles, liquid hand soap, and more. Earlier this month, Bath & Body Works shared their third quarter earnings report, where they came in ahead of expectations for both earnings and revenue. They had quarterly net sales of $1.68 billion, surpassing the consensus estimates of $1.41 billion. The company reported quarterly earnings of 92 cents per share, which was up over 10% year over year, and comfortably surpassed the consensus estimates of just 52 cents per share. Following their earnings report, we had plenty of analysts weighing in with price targets. One of those was 4-star analyst Ike Borishow from Wells Fargo. And he notes that the company appears to be a retail standout. They posted a solid Q3 print with an upbeat Q4 outlook. The analyst highlighted that the company has lapped the scariest COVID compares it had looming, and the business simply continues to post impressive growth. As a newly public company, he believes there is further evidence that the stock deserves a more premium multiple. And that comment just reminds me to remind you that Bath & Body Works used to be coupled with Victoria's Secret, who split off into their own company this summer. So Bath & Body Works isn't exactly new to the market, but just new as a standalone without Victoria's Secret attached to them. Now, the Bath & Body Works currently has 15 analyst ratings and comes in as a strong buy based on 13 buy ratings and just 2 holds. The average price target comes in at $89.47, which would be an upside potential of 21% for this next year. And pretty much all of the ratings are fresh within this last week following that earnings report. On the low end, we do have a hold rating with a 3% upside, and on the high end, a $105 price target from JP Morgan, which would be growth potential of over 42%. The second retail stock on our list today is Burlington Stores, better known as the Burlington Coat Factory. Their stock trades under the ticker BURL, currently priced at $280.17. Burlington is nationally recognized as an off-price retailer. The company's stores offer an extensive selection of in-season, fashion-focused merchandise at up to 60% off other retailers' prices. They have a national footprint with 832 stores in 45 states and Puerto Rico, and attractive store economics with the potential to expand their store base to 2,000 stores. Prior to the pandemic in 2020, the company had a strong history of their net sales growth, with a compound annual growth rate of 8.6%. Burlington is now focused on reaching the store's full potential. They have a strong track record of growth and profit improvement, but they do remain the smallest, least productive, and least profitable of major off-price retail chains. They see this as a significant opportunity to drive growth. This has Burlington focused on Burlington 2.0. That strategy will include chasing the sales trend, operating with leaner inventories, investing in buying and planning, more operational flexibility, smaller store prototypes, and challenging expenses. Looking at their 5-year growth plan, they plan to open about 90 new stores in 2022 and 100 to 120 new stores in each of 2023 through 2026. They project low double-digit average annual sales growth over this period. The company shared their latest earnings report just earlier this week on November 22nd. They made their earnings comparisons to the third quarter of 2019 due to the volatility in the 2020 results as a result of the pandemic. The company posted net income of $93 million, or $1.36 per share, which did come in ahead of analyst expectations. One analyst weighing in on the stock following this earnings report was John Curran from Cohen & Co. He commented that Burlington management provided analysts and shareholders a big favor by providing a detailed map into fiscal year 2022 and beyond, which highlights the potential to lap stimulus-driven comparisons along with detailed margin expectations and long-term unit growth plans. Management may be able to chase upside relative to initial 2022 plans. The Burlington stock currently has 14 analyst ratings. And looking at all analyst ratings, it does come in as a moderate buy with 10 buys and 4 holds. But if we just look at our top rated analyst, it does switch over to a strong buy based on 10 buys and 3 holds. The average price target comes in at $352 for an upside potential of nearly 26%. And again, we have many new ratings following that earnings report. On the low end, we do have a hold from 9 days ago, which still has an upside of 15%. On the high end, we have a $410 price target from Jefferies, which would be growth potential of 46%. And last but certainly not least is the TJX companies. Under the ticker TJX, they're currently priced at $70.29 per share. TJX also pays a dividend with a current yield of 1.46%. They are known for their leading off-price apparel and home fashion retailers in the US and worldwide, including big names like TJ Maxx, Winners, Marshalls, HomeSense, and Home Goods. Their global store base spans 9 different countries on 3 different continents, and they have a global supply chain and distribution network, sourcing their goods from a universe of approximately 21,000 vendors in 2020. They also boast decades of US and international expertise, with all of their major divisions having 25 years or more of operating expertise and a highly integrated global team and international infrastructure developed over the decades. Just like the others, TJ Maxx also recently shared their latest earnings report. Theirs came out on November 17th. For their third quarter, they saw their comparable store sales increase 14% year over year, and it marks the 3rd consecutive quarter that overall open-only comp store sales have increased mid-teens or better. Their net sales were $12.5 billion, which was an increase of 20%, and their diluted earnings per share was 84 cents, which was a 24% increase compared to the prior year. One analyst weighing in on the stock following their earnings was Kimberly Greenberger from Morgan Stanley, who named the TJX stock one of her new top picks. She named the stock as her new top pick following their Q3 earnings, where she saw them underscoring the credibility of margin inflection. Market share gains combined with strategic pricing actions could reverse the nearly 200 basis points in EBIT margin compression that they experienced in 2014 to 2019. Kimberly is one of 13 analysts that currently have a rating on the TJX stock, and it does come in as a strong buy based on 11 buy ratings and 2 holds. The average price target comes in at $87.69 per share. That would be an upside potential of nearly 25% for the next year. On the low end, we do have a hold rating with a very slight downside of 0.09%. On the high end, we have a $102 price target from Barclays, which would be a growth potential of over 45%. So there we have 3 retail stocks rated strong buys from top analysts with some double-digit upside potential. Now, you guys know I always love hearing from you, so let me know your thoughts on these 3 companies in the comments down below. Were any on your radar already? What do you think of their growth potential, and what are some of the other retail stocks out there that have caught your eye lately? As always, please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you all so much for watching. I hope you have a fantastic day, and I'll see you back here next time.